Welcome back. Stocks soaring after Powell's comments. But the next major market catalyst, it's Nvidia earnings next week, when we could see new risks out of China loom large. Well, Kristina Partsinevelos has the latest in today's tech check. Kristina.
Well, Nvidia has halted, like you said, some production of H20 chips, and that was seen as a negative. And these chips are designed for China after Chinese regulators discouraged local firms from buying them. And this is according to the information. There was also a report from Reuters. So that means roughly 700,000 chips are now sitting idle at packaging plants. But that comes just weeks after President Trump reversed his own ban on these exact same chips. Nvidia's China revenue has already fallen from 26% to 13% of total revenues in just 3 years. But while Wall Street sees this as a China problem for Nvidia, to your point, Morgan, it's actually accelerating China's move away from Nvidia and all American suppliers. Chinese companies now hold 16 of the top 20 spots in open source AI rankings, 80% according to artificial analysis. The U.S. has just 3, and they're building these models to run on Chinese hardware. Take DeepSeek, delayed R2 model. Markets saw the Huawei chip issues as bullish for Nvidia, but sources tell me that's the wrong read. DeepSeek had to train R2 on Nvidia chips because of Huawei's software issues, but they're still planning to run the finished model on Huawei chips. The key insight is that training happens periodically, but inference happens millions of times. If developers build these apps on these Chinese AI models, they'll be running on Chinese hardware, and that's something Nvidia doesn't want. So while Nvidia gets squeezed between Washington's restrictions and Beijing's security concerns, China is solving its chip dependency problem. Nvidia's earnings next week will show the near-term impact, but the real threat is China building an AI ecosystem that just doesn't need Nvidia at all, Morgan.
All right, Kristina Partsinevelos. Thank you.